Heading: Working capital cycle. Side heading: Meaning. First point. Working capital cycle refers to the time taken to convert raw materials into finished goods and then into cash. Second point. It shows the continuous flow of cash in business operations. Side heading: Stages of working capital cycle. First point. Purchase of raw materials using cash. Second point. Conversion of raw materials into work in progress and finished goods. Third point. Sale of goods either in cash or credit. Fourth point. Collection of cash from debtors. Fifth point. Reinvestment of cash into business operations. Heading: Factors determining working capital requirements. Side heading: Nature of business. First point. Trading firms require less working capital than manufacturing firms. Second point. Service industries require comparatively lower working capital. Side heading: Scale of operation. First point. Larger businesses require more working capital. Second point. Small firms require less working capital. Side heading: Production cycle length. First point. Longer production cycles require more working capital. Second point. Short cycles require less working capital. Side heading: Credit policy. First point. Liberal credit policy increases working capital requirement. Second point. Strict credit policy reduces working capital need. Side heading: Inventory level. First point. Higher stock levels increase working capital requirement. Second point. Lower inventory reduces working capital need. Side heading: Seasonal nature of business. First point. Seasonal businesses require more working capital during peak seasons. Second point. Requirement is low during off-seasons. Side heading: Growth and expansion. First point. Rapidly growing firms need more working capital. Second point. Expansion increases operational requirements. Side heading: Production policy. First point. Continuous production requires more working capital. Second point. Seasonal production requires less working capital. Side heading: Business cycle. First point. During boom periods, more working capital is needed. Second point. During recession, requirement decreases. Side heading: Availability of credit. First point. Easy availability of credit reduces working capital requirement. Second point. Tight credit conditions increase need for working capital. Side heading: Inflation. First point. Rising prices increase working capital requirement. Second point. More cash is needed to maintain same level of production. Heading: Importance of business finance. Side heading: Establishment of business. First point: finance is required to start and set up a business. Second point: it helps in purchasing assets and infrastructure. Side heading: smooth operations. First point: finance ensures smooth day-to-day business activities. Second point: it helps in paying wages and purchasing raw materials. Side heading: expansion and growth. First point: finance supports business expansion and diversification. Second point: it helps in entering new markets. Side heading: innovation and modernization. First point: finance is needed for adopting new technology. Second point: it supports research and development activities. Side heading: risk management. First point: adequate finance helps absorb business risks. Second point: it provides stability during uncertain conditions. Side heading: employment generation. First point: finance helps businesses expand operations and create jobs. Second point: it supports economic development. Side heading: marketing and distribution. First point: finance is required for advertising and selling products. Second point: it improves market reach and customer base. Side heading: profit maximization. First point: efficient use of finance increases profitability. Second point: it helps in better resource allocation.